What's up, investors? Ken here from the Dyslexic Investor, and we're going to be looking at my IRA portfolio that I have with my bank. This is somewhat separate from my trading account, but I do kind of actively manage it and trade it quite a bit. So we're just going to go through and what is in the portfolio. The total amount is about $12,371.55 totally in the IRA account. And the full amount is not completely invested because I just sold a couple of trades. I sold my Tesla position this week, which was absolutely fantastic, which was a pretty significant core holding that I had for well over like $1,200, $1,500 in that initially investment, and nearly got probably 35-40% of that. So let's just go down the list here. First, we're going to start off with the overall look at the market, and bamboozle, what a week here. We are near all-time highs once again here. Let's go on a better chart looking here. See here, we are... Whoa. Look at this. The all-time, the high this Friday was... Are you serious? Nearly... I can look on this, and I can click... So the high was 39, so 30.27.39. The all-time high is 30.27.98. So we're literally talking about 50 cents ish, 40 cents ish is from the all-time highs. And what would happen if we would touch it again? I'm not 100% sure. I think that we kind of can hang around here for a little bit and potentially might go lower depending on what news might come out and so forth. But we're not here for that. We're looking at the overall markets right now. We're going to be looking at some core positions. So first and foremost, we're going to be looking at Activision, which is a position that I started a couple months ago, probably the beginning of summer. Yeah, right around this area here, we started this position. I just like the full-on constellation here. Constellation by this, like, just kind of hanging around this like $45 level, and I bought in. It's not a core holding, so normally what I do is I break down positions in the sense of, so I kind of play with whatever is the total value of the portfolio. So right now it's at $12,371. So I usually do anywhere from $500 to $600 to start a position. So $500 to $600. Again, that's not much. Like, you're talking for a stock that's $45, you're only getting 10 shares of this. But again, trading these over the longer term, trading in and out of these, adding to positions, cutting losses really fast is core to this like dividend / aggressive growth IRA account that I'm using here. So this is, I like this. This is before like WoW Vanilla came out. This is kind of around when they announced the new Call of Duty Modern Warfare, and that's been kind of hyping things up. So I'm very pleased with that position. The next one, we're going to go to one of my core positions. So this is basically, it's initially well over $1,000 within the portfolio. And this has been kind of hit and miss, honestly. We bought in around right before like the Disney Plus stuff hit. It was literally like a week. Like, I think we bought in. Let me look at the mission. Look real fast. Yeah, it was around 3 something, 3.5, 3.15. So right around in this area. We thought, I like this this break or this consistency holding here. Then you clearly had them announce the Disney Plus stuff, which is the rival of the streaming services like Netflix, and you had a huge pop up, and ever since then it's kind of been hanging out here. So I want to make sure that it doesn't break this level here. So we're actually going to put an alert. Create an alert on this at or below that level, so we don't want that to break that. So another core position, it's been fairly well. It pays a nice dividend, kind of a growth, kind of a dividend play stock. Then DPZ, Domino's Pizza. Yeah, they're not the world's greatest pizza in hindsight, but I want to make sure, I want to look at this right chart here because I bought this on a huge dip on earnings. Yes, I bought it right about here. Yeah, at $240 ish, $244. It's been kind of a lagger. We actually added a little bit more to this. This is actually somewhat of a core position. I kind of wanted to play the flip side of this. So their kicker is they're being beat down by the other food service companies that are delivering food, but they're using a lot of the companies like a Grubhub, Uber Eats, all those different various services that you can purchase a Whopper or McDonald's cheeseburger from and have it delivered to your door. They're actually losing money on each transaction, and the Domino's people are saying that's really hurting their business because they're not able to go head to head to this. But the kicker is that's going to change. I really do. This is a long-term hold for me. That what's going to happen is the guys that are funded by the hedge or the startup companies and things like that, they're not going to be able to maintain such low fees for being food to be able to be delivered. So that being said, my bet was for that to change, and I did buy this a little too early. I bought it after a bad quarter. It ran up, and I thought at this point it's going to continue to go higher, but it continued to sell off, and this went lower, and I was down about $20, nearly almost cut the cost, because if I go on a longer term time frame, like a weekly, like I was looking at this level right here. So this is my get the hell out of Dodge kind of level here. Let's just actually I'm going to hold this level right here, because this is where we added like a couple days prior to this. So we're just going to add below that price. So these are great alerts. So that's just like, let's get out of Dodge. This is my initial position. So let's actually add another alert there. Add her below, please. Thank you. So we added in there, so our cost base is a little bit in this middle area here. So we're up on the position. It's a nice core position. It's going to be a much longer term hold. We might take a little bit off when it hits like all-time highs, but we'll see on what the overall market looks at that point. Then we're going to go to one of my favorites. It's been fantastic for the portfolio. It's the Home Depot, or HD for short. So let's go on a daily chart. This thing has been a tear up. This has been kind of an easy hold for the core position. Again, a core position, it's going to be nearly a little bit. This is about almost 12%, 13% of the portfolio. And this has been a fantastic hold. It's been really staying steady above the 200 simple moving average. It has had its sell-offs and its breaks, but it's always been, it just flattens out, builds a resistance, builds strength, and then pops back higher. So this is going on a weekly look here. Oh, went fast it. Weekly look. Again, you know I love my yellow line. Each time, what time did we bought this a ways back when. We're up quite a bit on this. Let's see. Yeah, I think we probably bought it in this area here when this hit like the 80, 89 right here. And again, normally what happens is you buy some and then it goes lower for a little bit, but not to the full extent. Because what I was looking at, it was like, oh, if it breaks the 21 EMA, it kind of catapults back, kind of holds support at the 34 and so forth. But once it broke past the 34, and I was like, oh, it's going to hold the 50 or between the 80 or 50, and it kind of somewhat did, but it kind of sold off a little bit more. Again, but this was the whole total sell-off that we had last year, and from October, November, and December, and then Christmas or the day before Christmas, popped much higher. So this has been a fantastic hold, and just nibbling a little bit each time it touches the yellow line. So it's at all-time highs. Super happy with that position. Now, again, it pays a dividend, things like that. So now we're going to flip it, and now we're going to go to a very speculative play company here. They do plastic surgery stuff to make people look good. So they do plastic surgery. This is INMD or MWLT. This is not a core position. This is a speculative position. We picked up a small handful of these shares. I believe, honestly, this is when Jim Cramer announced this. So a couple of people called into the Mad Money show, asked about the stock, and he did his due diligence, kind of gave somewhat of his blessing. It put it on my radar to look at things, but it's been a fantastic hold. This is more like might hold this in a small trade, in the sense, maybe like a trade by like 3 to 6 months. We bought it in this area here around $23. Once the purple cut above the yellow, I knew I was up for a wonderful ride, and it's been bananas. Again, it was only speculative, so it wasn't a cash cow. If this was a core position, this would have been a beautiful near double almost at times. But this was a beautiful little investment, and going to continue to hold. And let's just set up a couple sell markers. We're going to add one right here. Create an alert. Add or below here. We want to keep that on I there. Then Johnson & Johnson. Again, this is a dividend play, but this has not been a performer, to say the least. It's been tossed around. This has been a long-term hold since probably, we're talking years. This has just been getting dividend here and there. This has been a core position and just collecting dividend. There's nothing more else to say about this. If this continues to break here, we might have to look at it and reevaluate what's going on here at the company and reinvest that. We got another dividend play. We got the Pepsi. No offense to any Coke people. I prefer Coke as well. But this is another core position. This is another dividend play. They play a pretty high dividend at nearly 95 cents per share. 92 to 95. They added a couple. They've been raising the dividend quite substantially. So you see, it was just 80 cents like 2 years ago, and then they went up to 95, which is a nice little bit here. And this is on a weekly chart, so this is what I normally trade on when I do my IRA trading account. So it broke this yellow line and it just jumped on my radar. And this is when we bought it, and it's been a nice little run up from there. Nothing really else is most to say to that. Then we have our one and done, our boy Tesla here. Wow, what a heck of a time with this guy. We bought this. You see, I have my Fibonacci retracements here. So this has been a ride for sure. I've been in and out of Tesla for years. I remember buying it way back at 150-ish over here, selling it probably over here right before the pop, making money, and then missing all this little beautiful run, and then consolidating, and then consecutively seeing it going down. I believe we bought it after this quarter here. This was the one where this is telling me the year on here. This is the beginning of this year. No, it would have been November. So it was, yeah, we bought it before the November quarter here, because the bet was that they're going to have quite a few people trying to get the tax credit before the year runs out, and I think we literally bought in. This was a slight core position, so I put about $1,000 into this. It popped up substantially within like a week and a half. Got out of it pretty fast, and then missed this whole part, but then got cold feet and emotional about it and wanted to buy back in. So once it broke the 21 again, I actually bought in again. I think it was when, let me go on my other chart here. So we probably bought in right about this area here. Yeah, right about here. This week is around a little bit below 300, and that was painful. That was very painful. And then consistently seeing it going down and down and down, sold it here for a loss. Then saw it go down, and then it went on our radar of like, holy moly! It hit the RSI, totally oversold. Bought another core position here. It was around like 180, I believe. Yeah, 180 core position. So we're only talking maybe 7 or 8 shares. Not even that. Those 7 shares. It's nothing substantial. This is just an IRA account, just valued around $13,000. So that was, it hit there like 180. We held it, and then ever since then it's kind of been popping higher, and then literally sold it at around like 315 earlier this week. So that was a fantastic little turnaround there. Then currently we have a play going on at Twitter. We bought some literally on Friday. Same kind of thing. I feel like I'm jumping the gun a little bit, so it's showing a little bit nearly. It hasn't touched it. Oversold here, so I'm kind of jumping the gun. Let me go here. Where is it? No, let's just do here. I do the daily. So this is the blue teal here. Substantially oversold. I think that the value is more than what the assets are worth. So we bought some around like 29 or 30. It was like $30 and like 25 cents. Nothing, no core position. This is a speculative play, so we're talking like $500 worth, about 35 shares. I think 32 shares. So 32 shares, and here what we're looking for is literally a small pop into next week, kind of what's repeating here. So within the next like 2 or 3 weeks, it kind of comes back to the halfway point. So the halfway point between 45 and 30, we're kind of looking at the sweet spot around like 38. So $10 per share. We're looking for a nice little change here, a couple $100 here to put back into the account. So that's just a nice speculative trade. Then I had some VXX because we bought some more. We actually bought some more on the dip here at $22.25. So if you're not familiar what VXX is, it's basically the volatility index for the SPY or the S&P 500. So basically, this thing spikes up like crazy if there's crazy volatility within the market. Sorry, I just dropped my pen on my keyboard. So high volatility, meaning that we're hit near all-time highs. I have a feeling that we might get a pullback. So we bought some here around $21. We're down in it. This is a little bit of a longer hold. So I thought it was going to pop. So it popped up great, breaking the 21, but it never really went anywhere. So we want to see the teal line kind of bust through the yellow line, which it never did, and it kind of died off. So we added just a tiny bit more. Again, not a core position, just to kind of protect some of the assets long term on that. And then last but not least, we have a pretty big core position here, about 12 to 15% of waste management. And this has been a hold for the portfolio for quite some time. We've been buying this for years and years, literally just looking at this yellow line and just riding this up. Great dividend stock. Been owning it for years and years, and just buying the dips when it hits the 21 after bad earnings or anything like that. So it's been consolidating up here. We're trying to figure out on what's going on here. It's not the most painful right now, but it's not the most optimistic right now. So again, it's a long-term hold. We have well over $3,000 in cash to add more, but the time is when do you add more to this position? I would have to let it come down quite a bit more. So that being said, we probably want to see it come down to this level here, like the 106 level. So I'm just going to create an alert there as well. So yeah, so the 106 level is definitely a buying opportunity for us. It's waste management. They did collect your trash, like they buy these smaller companies and so forth. Great little dividend play and so forth. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor. If you want me to do more of this, like do once a week or every month, my portfolio analysis for my IRA and so forth. But I was gonna tell you my true core position is in SPX. So I have SPY actually as about $7,000 in SPY. So it's basically I have a Vanguard fund, in the sense of just tracking the S&P 500 and paying a really small fee on that. Again, guys, thank you so much for watching. If you have any questions, comments, put them down below in the comment section. Again, I'll catch you guys on the flip side. Peace.